Seriously? Seriously? All right. Mm. No one cares about that, bro. Mm. 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 Yeah, I think today's a red day today. I think we read today. Mm. Mm. Yeah, that's right. What's up, Investor Z? I've already made maximum daily profit on this initial short. See if I can kind of get back into this position and make some more money or earn some more money. Earn some more money. Hmm. Wish this thing had a always floating option. Damn it. I mean, why did that even make sense for that shit to do? Mm. Nice. All right, so what the hell was that? Like, why is this doing this? There's something with this damn thing. We got our boy Crash Kari coming up at 9 o'clock. Let's see if he still got that crash effect. We got him coming up in 30 minutes. Okay. I mean, it looks like the market's trending. It looks like it wants to trend. I hate taking shorts, but I'm not going to take no long because I don't think the longs are going to work out. I mean, unless they do. Um, hmm, hate taking shorts. But as I was looking at the charts this morning, I was thinking to myself, well, I mean, if I don't want to take the shorts, then obviously wait for the long. But I mean, a good long setup is all the way down here. In order for the market to get down here, it has to go short. So it's like, man, well, I mean, you're just gonna have to endure and do the best job possible. Mm, okay. Don't even feel the. Oh, okay, I'm about to say. I'm pretty sure that's probably Trump saying something. I mean, at this point, mm, yeah, I mean, that's the. Didn't think that would be possible, but. Mm, mm. Mm. Well, I do see that we got this block of liquidity right here that the market is now rejecting from. Yeah, I don't know why it did that though. I mean, why did we see that? Ooh, of course. Now, why did we see that? Like, where did that bounce come from? That bounce just kind of came out of nowhere. I mean, oh, okay, yeah. Right there. And this right here. Okay. All right. So I mean, it would have been nice to get this target filled too. That would have been nice, but I would at least got if this one got filled, I would have had that target hit already. This might be going for 400, 395. But when it comes to bears, that may be where they're trying to get to, but for the most part, they usually don't get there. I mean, it's a blessing to get it on the first attempt. Nice. All right, nice. It's a blessing to get that thing on the first attempt. So, okay. But I think, I mean, if the Bears can hold this, we can get this move finished out. But I mean, the Bulls can't come in at any moment, kind of like what they're doing now. And this is why I just hate trading on the short side. But there's just not enough room for Bulls right now. And I feel like any push would just be a momentum push, but not like a real push. And that the direction of the market is that it's going to the downside. Because I mean, somewhat it is still respecting this trend line. We are seeing the Bulls making an attempt to buy off of it and failing right back underneath it. You can see them right now trying to buy it off of this trend line. You can see them buying it off of it right there. But it looks like they're failing miserably right now. So now we got price right back into the trend line. So I mean, this resistance trend line right now is giving me the well, never mind. There he goes. Don't matter. Profit's already taken. Okay, cool. All right, so we made a cool $600. Let's see if we can find another trading opportunity. It would have been nice to have gotten this one filled. You know, it would have been nice, but we're not going to complain about it, I guess. All right, so let's see if we can get another. I mean, I feel that we could potentially see a bounce here at 405 potentially, but I mean, we got a bounce from there yesterday. Yeah, I just feel today is just going to be a red day. I don't trust longs at all. I feel like they'll be short lived if we see them. Mm. Yeah, I'm probably gonna have to wait on this one for another entry. Yeah, we might get a pump back up, but I'm just gonna wait for the break. But I'm not going to trade the break. I'm gonna try to get just wait for it to set up and yeah, he hasn't even moved at all. That's why I'm not ever gonna trade it. ES didn't even move. Okay, so we got that bounce at 405. Like I said, I don't think they hold it though. We'll see what happens here. Mm. Hmm. Okay, so this is what I'll do. I'll get into it. I will get into it because I think, I mean, anything underneath this low, we'll see a flush, but then we could see a pop. I'm not going to sit here and say that that's not even possible. We could see a pop. Mm, mm, okay. Hey, yo, what's up, Alfred? Okay. Man, really, let me look at this, man, because I mean, we got a flush underneath that level, and we could see a bounce at 70, 75, 70. Mm, you could see a bounce here. Mm, Okay. I mean, if we get to 75, I might just start trailing this thing because we could see a bounce there, and I really don't want to deal with the drawdown, especially being this low. I mean, I wanted to trade the breakout of this level because it looks like, so this is what I'm seeing right now. So this used to be support. I see like a small little break, a pop, and then the bear is kind of holding that level. So I mean, we could see this thing just fall. This thing was support. Now they came back and using it as a resistance. So we could see. So when price kind of get here, I kind of want to see what it does. All right, so let's see what it does when it gets there. I want to see what it does at that low. All right. Okay, so when it gets to this low, I'm gonna get kind of aggressive with my stock because I really don't want this shit to pop, and I really don't want to deal with the the pump. Okay. All right. Okay, cool. I'm leaving my stop. There we go, baby. There we go. That's what I'm talking about, baby. That's what I'm talking about. That's what I'm talking about. That's what I'm talking about, baby. Yeah. Oh, yeah, I mean, I don't have the trailing drawdown. Or are you talking about yourself? And dude, and that's what I hate, man. That's why I hate the trailing drawdown. Hate that so much. Okay, so it does look like, yeah, dude. I really think that the shorts are just going to win today. The longs are just going to keep trying. Oh no, no, no. I'm in blue. I'm in blue sky. I'm in blue sky. I haven't traded Apex, so I got those Apex accounts and I haven't traded them yet. I guess I want to finish these blue skies up first and then focus on them Apex accounts. Hmm. Hmm. All right, so that's at 9 o'clock. I'll go. I mean, I don't trust the longs. I don't want to take a long. I'll take a long down here. Actually, let me just set up a limit down here. I'll take a long down here. I'm just not. I mean, a long right here could work. I mean, you do got the value area high from what Monday session, I think, right here. So I mean, you do have the value area high right here, though. But man, you know what, man? Uh, mm. We'll see how it reacts. I prefer to go long down here, actually. But I mean, if it does pop up and I see a long opportunity, I will take it here. Hey, what's up, Cam? What's up? Mm. Tomorrow I'm going to activate the the My Funded Future account. I'm gonna do it tomorrow, or at least I'm gonna finish the setup tomorrow. Probably do it at the end of the day today after the market close. I just want the market to. I really do think that we're just going to get a big red day today, and I don't want to deal with that. I really don't. It looks like I left some money on the table. Well, I mean, my stop came anyway, so it don't matter. Okay. I am willing to take a long down here. So we'll see what happens in this area right here. We are getting closer to 9 o'clock. So I'll take a long right there. If it limits me in, then I'm good with that. If not, then I'm also good with that too because I miss. Mm. Because I mean, if it breaks below that low at 290, then yeah, that's it. I mean, that's a strong low right there. That is a strong low. That means that the market doesn't want to hold this area up no more. So breaking 290 would not be a good thing. I do see a pool of liquidity around 250. Girls. Okay. All right. So let's see. I'm gonna probably add one more here as well. Hmm. All right. Let's see what our boy Crash Kari does in the market. I'm pretty sure he's already speaking, but he's scheduled to speak at 9 o'clock. So we'll see what he does. See what kind of reaction we get with Crash Kari. Not hard. I mean, I do that shit to myself. Okay. I mean, we can see if we can find to see. We can see if Crash.
From a movie that everybody
Mm.
probably the person you're here to really hear. I mean, everybody else is great, but I mean, let's be honest, right? It's all about Neil. I
Crash
would be
Kari,
remiss if
baby.
I didn't
Crash
thank
Kari.
our generous sponsors. We have Midwest Bank, our breakfast sponsor, and our platinum sponsors include Essentia Health, Bremer Bank, and the Detroit Lakes Development Authority. Our gold sponsor, First National Bank, and our silver sponsors include Project 412, ARVIG, Apex Engineering, M-State, BTD, Mid-Minnesota Federal Credit Union, Pro Resources, the DL Trib, Precision Landscape and Irrigation, Counselor Realty, First Lutheran Church, the Detroit Lakes Public Utilities, and Bell Bank. So if you could help me thank them with a round of applause. Thank you. So our theme this year was partnerships. We know that we can't do all that our community needs, meeting all the opportunities and challenges without the partnerships of many, many people, many, many stakeholders, and people that are really engaged in making sure we move our community forward. So that's what our theme is partnerships. You're going to learn more about some of those partnerships and how you all can be part of moving the community forward. So I'm really excited to see and hear all the presenters. So as we get ready for our featured speaker, I'm going to ask Eric from his staff to come up, and he's going to tell us a little bit about some interactive, um, using your cell phone, interactive questions. So he's going to come up front and tell us a little bit more about what that entails. So I'm going to ask. He's running towards the stage. Here he comes. Super. Be sure that you visit some of our vendor tables during the breaks, and we will have a break before we conclude here at noon this morning.
You know what? Hopefully he doesn't do that now. Hopefully.
Good morning, everybody.
He does not crash this shit now.
I'm going to ask you to keep your phone silent.
Because I am long. I took the long. And now, I mean, if we pump it, hit my targets, and then he can crash it. Yeah, for sure.
Then what you're going to do is send the word Minneapolis to the number 22333.
Crash Kari. Crash Kari, we need you.
And then after that, you're going to get a message saying that you've logged into the Pauline site.
Hey, that was last night.
It open because Neil is going to ask you some questions at some point today.
You know what Griff can trade? Dude.
Thank you.
Thank you. Perfect. Thank you.
I guess depending on what they do here, I will probably agree with you. Depending on what they do.
I would like to introduce our keynote
Because if they take out that low, what low was that? Was that yesterday's low or something like that?
President of the Federal Reserve Bank of
if they take out that low at 290, oh yeah, we're going down. This thing is crashing. But if this thing can hold above that, then yeah, we can probably see a pushback up.
The Dakotas, Montana, northwestern Wisconsin, and the Upper Peninsula of Michigan. Neil serves as a member of the Federal Open Market Committee, which sets the nation's monetary policy. Kind of been busy lately. Neil began his career as an aerospace engineer developing technology for NASA space missions. He later held a variety of roles in public service and finance, most notably as Assistant Secretary of the Treasury during the 2008 financial crisis.
He also crashed the market by saying some crazy shit while everybody was long. Don't forget to add that.
With his wife, 2 young children, and their Newfoundland
Only us
dog,
bears love
Orno
Crash Kari. Everybody else is on site when they see him. I'm surprised somebody in the crowd didn't jump up and say, I was in calls when you did that
Well,
stupid shit.
good morning, everyone. Thank you, Jackie, for having me.
I
Thank
was
you
in
all for being
calls.
here. I thought I'd just start by just giving you a little overview of why we're here, what the Minneapolis Fed does, and why we're here. And then, as Jackie and Eric said, I'm going to ask you some questions because I want to learn about what's happening in the economy here. Excuse me. I've been at the Federal Reserve for about 10 years. This is my 10th year here. And as Jackie said, our jobs are to represent all of you. So we have six states in what's called the Ninth Federal Reserve District. There are 12 Federal Reserve districts in the country, and our jobs are to represent you. So I go back to Washington, D.C. every 6 weeks, where we have Federal Open Market Committee meetings where we set interest rates for the nation. Part of what I'm doing in those meetings is I'm talking about what's happening here in our regional economy. Now, we cannot set a different monetary policy, a different interest rate for Minnesota and for California and for New York. We have to set, because we all use the dollar, we have to set the same interest rate policy for the country. But my job is to make sure that this region is part of that deliberative process so we
Okay.
get the best policy we possibly can for the country as a whole. So meetings
This is
like
tough
this and visits like this are great because it
because
gives
I
me
know
a
the
chance
direction.
to directly hear from people, how's the economy going?
The market is trying to
What's
continue to
happening
go
on
down, but
inflation? That's obviously a big topic.
mm,
What's happening in the job market? Is
this
the
is a great area
economy
to go long
strengthening?
if the market
Is
will
it
go
slowing
long. So
down?
I'm gonna take
What's
it.
on your mind? And all of this with me and my colleagues helps us get smarter about what's going on in the national economy too. Now we look at a ton of data. We look at data on how fast is the economy growing, how much investment are businesses doing, are they hiring workers, are they laying off workers, is inflation going up, is inflation going down? But a lot of times that data that we're looking at send us conflicting signals.
All the legend
So
says,
how do we
you
make
want to see
sense
the
of it?
previous day low?
Well, conversations like this help us to make sense
Yeah,
of
at
it because you all,
292.
I
Yeah,
hope,
that's actually what
are
I'm
going to
looking
give
for
me
too.
feedback about what's happening here in the regional economy here.
I want to see
And
how
that
price
helps me
reacts
make
at
sense
that
of, okay, is
level.
the economy growing or is it
Because
slowing
if it
down?
breaks
And
that,
so
then
the
we're
more
going
candid
down.
you are with me, the more I will learn from you. And even if your candid
Nice.
feedback is, hey, you idiots don't know what you're doing, um, I've heard that before, by the way. Feel free,
Hold on,
offer
what the
it.
fuck just
I
happened?
promise you, we will take something away from whatever feedback you have to offer. So, with
Mm,
that, Jackie, thank you. I'm going to turn to some of these questions just
mm.
to collect a
I
few
didn't
data
move
points
my
from you on who
stop.
you are and what you're
Oh
seeing,
my, I didn't
and then
move it.
this will help shape
Oh
our
damn,
conversation.
I
So,
didn't
first
move it.
question is, which of the following
Fuck.
describes you? Are you an
Let's see
employer,
here.
a worker, a student looking for work, um, not working, retired?
All right, so we didn't get to it. We almost did though. Damn, took an unnecessary loss. I wasn't even. Ah, man. Okay, I took that. I took that loss for no reason.
Can you see it?
It's fine.
Yep.
I'll get the money back. Damn.
Okay, so this looks pretty good. We have about a lot of employers, a lot of workers. I'm happy nobody's looking for work. So it sounds like everybody, at least in this room, is who wants to work is working. All right, let's go to the next question. How optimistic or pessimistic are you about the economy for this year? It's like an arm wrestling match here.
Mm. I guess if they reject it here, then we could see another leg
Okay,
down.
so it looks like it's kind of all over the map.
Mm.
Maybe a little bit more pessimistic than optimistic. Um, I wonder if we put a political lens on that, we might see two different categories of folks there. But pretty evenly split, optimism and pessimism, okay? Next question. What influences your outlook assessment? Like, what are the key things that are driving your optimism or your pessimism? A word or two that you could enter in. It could be, anyway, I don't want to lead you. You guys just offer up your own. Tariffs, politics, Trump, interest rates, inflation, I'm seeing.
Mm.
uncertainty.
Mm.
Interesting. Okay. I don't think, I mean, I'll say this, we've done this a lot over the last several years, and it's rarely been this scattered. I mean, usually it's a fewer number of words
Yeah, if you
dominating. It
take
could
that
be
low out, then it's
housing
done.
or inflation or jobs.
You
There
take
are a
it
lot of
out,
words up on that
it's done.
screen. A few of them, of course, are standing out. Okay,
Mm.
just a few more questions. Let's go to the next one. How has the number of job openings changed
Mm.
in the last 12 months? They're growing. They're getting smaller.
Okay, that's what I kind of want to expect to see. I don't think the market wants to take this low out. At least not right now. At least that's my bias that they don't want to take it out right now. I mean, they could. They can definitely come back and sweep it.
Okay, looks like mostly unchanged. Maybe tilted slightly softer, but mostly unchanged.
I think they're going to want to protect
And
this
then I think
low as
the
good as,
last one,
at least for right now.
yeah, last one is how do you expect prices to change this year compared to last year? Increase by a
Mm.
lot or all the way down to decrease by a lot?
Mm.
Okay, so some to increase by a lot um, seems to be dominating. So inflation, sounds like we still have work to do on inflation. This is great. Thank you for participating. Really great context for our discussion. I look forward to our discussion.
Yeah, thank you. So I just want to say welcome, Neil, and Neil's team. They've been
I look
fantastic
forward
to
to our
work with.
discussion. I guess all the Fed
And
speakers got to say that.
just
I
a
look
reminder
forward
that
to our
Neil
discussion.
really does want to hear from you. So we're going to have two people going around with mics
Okay.
to hear your question. Please wait for the mic before you give us your question. Tell us who you are and who you're representing. Um, so I get to open it up with some questions. And my first question is, I should get our mic people. You want to come up and grab the mics really quick while I'm asking this first question, and then
The
they'll be
mic people.
ready to
The mic
find
people.
you if you want to stand up for your question.
The
They're right
mic
here,
people.
Alyssa and Darren.
That's funny.
There.
The mic
Thank
people.
you. Thanks. Super. Thank you. Okay. So my first question, and I've had a number of people ask me this question, and I didn't have an answer. So it is, why did you choose Detroit Lakes to make one of your regional site visits? I'd like to think that I called Neil, my good friend, and I said, hey, Neil, come to DL for our economic summit. And he would say, yeah, of course, anything for you, Jackie. Didn't happen like that. He decided to come to Detroit Lakes as one of his regional site visits. And so excited that you're here, but
Ah,
why Detroit
shit.
Lakes?
Ah,
That's the big
damn it.
question.
Yeah, and the
Okay,
answer
we'll
is,
see. We'll see what
which
happens. You see how
which
price
is
is right
true but
back
may not
underneath
be all
that
that
trend
exciting,
line and
is I
they're
haven't been here
pushing?
before.
We'll
I
see
try
what
to go
happens.
around and visit
Damn
cities
it.
that I haven't been to before. They're all a little bit
Damn it.
different. The
Damn it.
challenges they
Damn it.
face are
Damn it.
all a little bit different. I learn a lot more going to newer places that I haven't been to than going. If I always went to Duluth, I wouldn't learn as much than if I make my way around the state of Minnesota. And so I apologize, it's taken me a while to get here, but I'm very happy to be here now and have had a wonderful visit yesterday and today.
Yeah, thank you. Last night, we convened a roundtable of business leaders, business people, at the request of Neil and his team to really understand the climate here in Detroit Lakes. And so we had about 15 of our businesses meet with Neil. And I'm just curious, what did you take away? It was a very candid conversation. Again, for those of you that were there, thank you. But what did you take away? And the second question would be, is this what you're hearing
Okay,
elsewhere,
so
or
let's see what they do
did
here at
Detroit
this
Lakes
low.
seem unique in any way?
I heard overall that
Okay,
the
so they took
economy
the
is
low
doing
out.
quite well here.
Are they going to
That
sweep the low?
there are a lot of
Is this a
jobs
sweep?
still available.
Or
Businesses
are they
are
going to
still
take
trying to
that thing out and
hire.
we're going to get a close
It's
below
not
that
as
low?
hot as it
Because
was a
anything
year
below
or
that
two
low,
ago in
we're
terms
going
of the
down.
labor market. That's reflected in what you just
That's
said,
going
by
to
the way.
be a signal for the bears to get more
And the
aggressive in
economy
their
is doing well.
shorts.
But I also heard nervousness. the nervousness,
Trying
the
to get
factors that were put up on
and
that
become
word
more
cloud,
aggressive with their
nervousness
shorts.
about, hey, what does the future look like?
Mm,
Is the year going to end as strong as it started? How does next year look? And so I would say overall, Detroit Lake seems like it's in a good place, but there's some nervousness around the edges of what does the future hold.
Very good. Well, let's open it up to our audience. If anybody has a question, we're going to start with Phil.
okay. So I
Karen's
mean,
gonna
at
bring
least
the
right
mic.
now it's looking like a
Let
sweep.
the microphone
for the
come.
mic.
We're
Yep.
live streaming this, so you're going to be famous. And if you could introduce yourself, that would be great.
Phil Hansen, Becker County Commissioner. What is the district, the Federal Reserve District? Where are the boundaries?
Yeah, it's Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan, and northwestern Wisconsin. So it's an enormous geography, but a lot of it's rural. And so a lot of the communities are different. A lot of it's ag driven. There's energy, obviously, in North Dakota. It's quite varied.
Another question.
Yeah, they freaking do, dude.
Oh, wait. Okay.
You said ES double bottom
Ron, go
at
ahead, and then
58 though.
Darren, there's one back over there when
Okay,
you're done.
Ron Seaman, Detroit Lake City Council. The question I have, everybody's talking about housing. We have a shortage of housing.
Yeah.
It seems to be around.
Yeah, I mean, yeah,
interest rates
ES and the
people,
Nasdaq is definitely in the
needing
same
a
spot.
down payment assistance.
I mean, if they take this
And
out,
so
yeah,
what's gonna happen with
there is
housing
no,
in the
dude,
next,
there is no
couple
support
years?
underneath these lows, man.
Well, housing is a huge
There's nothing but
topic, not
stops.
unique to Detroit Lakes. Almost everywhere we go, there are housing challenges, and it's complicated. Interest rates are one piece of the puzzle, and
Yeah,
as you would expect, as
look at
interest
that
rates to
hourly
go
candle,
down
man.
over
That was
time, as inflation comes down,
nasty hourly
that will
candle.
probably lead to lower mortgage rates. But if you look
Mm.
at what's driving the cost of housing,
Yeah,
we've underbuilt homes
I may
for the
have to
last
flip
decade
here
all around our country.
or
So
look
there's
for
a
another
shortage of
opportunity.
homes.
Yeah,
Then when COVID
there
hit,
we
people
go.
started wanting
There
even
we
bigger
go.
homes because
There
some
we go.
people work from home and
Nice.
whatnot. That put even more demand for housing. And yet we have some challenges. We have construction costs that have continued to climb all around the country. We have shortages of construction workers to build those homes. So those two things are going to keep, it seems to me, those two things are going to keep pushing the price of homes higher or keep them high. So this is a real, and then we also have regulations and zoning and whatnot that also makes it more expensive to buy homes. So interest rates are one piece of that. There are longer term issues that certainly the Federal Reserve does not influence or control. A lot of that is driven by city, state, and federal rules and regulations. Everything from, could be tariffs on lumber coming across the border that could have an effect on prices, whether we have the workers that we need to build the home. So it's unfortunately a complicated puzzle that I don't have a lot of easy answers for you.
Great. There was a question over here.
There we go.
My name is Gary Christensen.
There goes the
I'm
drop.
retired general counsel from
There
Security and
goes the
Finance,
drop.
a company
There
you know
goes the
well.
Very
drop.
well.
Question. Well, first of all, I want to thank you for being here and thank you for your role in the GFC. It was very instrumental. I did a lot of
All
work
right, so let's see.
researching the work you were doing at the time. Question for you is, what are the biggest challenges and opportunities you see?
Yeah, this is exactly why I wanted to wait until tomorrow,
And I'd love to hear your thoughts on cryptocurrency and central banks generally.
because I kind of figured that the market was going to do this today.
Well, there's a lot under that question. We know we're very clear on our mandates, which is Congress has created the Federal Reserve. Congress created us in 1913. We have goals that they've given us: stable prices, get inflation all the way back down to our 2% target, and maximum employment, as many people working as possible. We've made a lot of progress in bringing inflation down. Inflation is now running, depending how you measure it, somewhere between 2.5% and 3% a year. It's above our 2% target, so we have more work to do. That's a big challenge, and we're very focused on that. And hopefully we can do that while keeping the job market strong. In the last couple of years, a big pleasant surprise for us was that inflation came down while the job market stayed strong. Usually when we raise interest rates aggressively, in a sense, we're slamming the brakes on the economy to slow the economy, get inflation down. And in that environment, you might expect unemployment to go up. The unemployment rate didn't go up very much, so that was a good thing. We're trying to land the plane, so to speak. So I think the biggest challenge for us right now is to finish the job. And some of the policy uncertainty that you all talked about in your word cloud is complicating our analysis of the economy. In terms of cryptocurrency, I've been very outspoken about this, so I don't want to change what I've been saying. I'm a pretty big skeptic. right? It's been 10, 12 years since Bitcoin's been
All
around.
right, man. I mean, this is
Nobody's
another
found a
area of
legitimate
previous
use case
supports. I
for
mean,
it
if they just
in
trade
a
through this
dozen
shit,
years, other than
I'm gonna have to really just
as
think
an
about
instrument of speculation. Like you want to just bet
what I
it's going
want
to
to
go
do
higher,
here.
that's up to you. Go ahead and do
Now I'm
that.
kind of wishing that I stayed in my original
Or as a way
short
to get
and
around
just
bank regulation.
followed my original thesis
There's
of
no
this being
actual
a
other
big
use
red
case
day,
for it. But if you want to speculate on it, I'm not
turning
here
in
to
one
tell you not to.
direction,
It's up to
no
you.
bouncing.
Speculate with your money
Our
however
boy
you
Crash
want.
Kari
But it's been a dozen years. As opposed
giving
to,
power to the Bears.
let me ask you this. How many people in this room have used AI in the last week? ChatGPT, Gemini, Grok, something like that? I have. I use it almost every day. Almost for the people watching at home, almost every hand went up. How many of you have bought or sold something with Bitcoin in the last week? Not a single hand has gone up. So a dozen years, and they're still searching for any kind of use for this, as opposed to AI, which is relatively brand new, and we're finding new uses every single day. So one of them is actually really useful. One of them is not. So hence my skepticism.
Good question. Other questions? Mike?
Good morning, Mike Stearns, MBFC. What are you seeing as far as how the ag economy is impacting communities throughout the 9th District?
Well, this is a big ag region, and the ag economy has had, it's so cyclical, and there've been low prices for a lot of crops in recent years. So we talked to a lot of farmers, and I've got ag-related companies on our board of directors as well that give us a lot of feedback of what's happening. So there are unique challenges. At the same time, productivity has been this incredible engine in the ag community for decades and decades, and hopefully that will continue. It's huge benefits to our
Honestly, it might
country,
actually
huge
just do
benefits
that.
to the world.
Honestly,
And as
because I mean,
populations
that's
have
what I'm
left rural
expecting it to do.
communities, because the ag economy has not needed as many workers to work those farms, that's created other challenges. You see schools closing, you see hospitals closing, just because people are leaving for other jobs in other areas. So really important, a big source of innovation in our economy and for the world, but also challenges. And and it gets complicated because at the same time, all that's happening, land prices have continued to climb. And that introduces a different set of challenges as well. And so, like all things, if it were easy, we already would have figured it all out. But there's a lot going on there.
Okay.
Very good. Other questions? Celeste?
Good morning. My name is Celeste Copy of West Central Initiative. Thank you for making the trip today. I am excited to hear you met with business leaders last night. I was also excited to see on the website for the Fed Reserve of Minneapolis that community outreach is prioritizing low to medium income workers. Do you have plans to meet with that demographic while you're here, or do you have examples of how you're accessing that demographic through this really cool texting thing that's going on? That was awesome. Thank you so much.
Thank you. On this visit, I don't, but we do a lot. I appreciate you pointing it out. We do a lot of outreach to community groups across the spectrum. We have something that you can find on our website called a community advisory board, which is made up of essentially nonprofit leaders from around the region who represent different
that's what's
groups
important to them,
and
so.
give us feedback on what they are experiencing. We also, I've got a bunch of colleagues with me who do this work for us. We also do going out to their communities directly. Sometimes we'll do roundtables, not just with nonprofit groups. Sometimes we do roundtables with their customers, like their members directly, grocery store workers. What were you experiencing during the pandemic? What were happening to your working conditions? What's happening to your wages, et cetera? So it's not one avenue. We just do a lot of outreach to get a sense of what's happening. Let me go back in time for a second. When I first got to the Federal Reserve in 2016, most of the economists said the US economy is operating at full employment or maximum employment. But when my colleagues and I would go out across the region and meet with especially lower income workers and groups that work with them, we heard a very different story. We heard that they were still looking for work, they're stuck in part-time jobs, they're looking for full-time work. Those conversations led me to say that we're misreading the labor market, that there's still slack in the labor market, we're not yet at full employment, and that directly influenced my vote to say we should not be raising interest rates because we're not really at full or maximum employment. So these kind of conversations are actually foundational to the work that we do.
And I will add, Celeste, last at the roundtable, we had Liz from Hubby speaking with Neil and kind of giving some perspective on their people that they help, their clients at Mojave. So that was helpful, I think, for Neil to hear that as well. All right.
Hi, Julia Nelmark with Midwest Minnesota Community Development Corp. And thank you for the opportunity to have the conversation with you yesterday. I would like to get your thoughts on how well our economy can work as kind of more of an internal economy without as much international interaction if the tariffs really come into play and last for a while. How well would the U.S. economy work without as much foreign?
Yeah, I'm not turning this thing up.
You know, we are relative to most countries, we are less exposed to trade. When other smaller economies, economists will call them small open economies, where almost everything they do, not everything, but most of what they do goes across borders. Because our economy is so large and so diverse, we already are relatively insulated from trade dynamics around the world compared to many other economies. Having said that, there's a lot that you and I buy that comes from abroad. And so whether it's televisions or consumer goods, you go to Walmart, a lot of the hard goods that you're buying come from abroad. So either you wouldn't buy those goods anymore, or those goods would have to be made here in America. And what does that transition look like? And what would we end up paying for those goods at the end of the day? And these are going to be political trade-offs that we're going to make collectively through our elected leaders on what do we want that balance to look like. And I mean, there's a reason that goods production moves abroad. In 2018, when the first round of tariffs hit, what we saw was less reshoring. It wasn't that the production moved from China to America. We saw more evidence that the production moved from China to Vietnam or China to the Philippines, et cetera, because businesses said, well, I want the lowest cost I can produce it in, so that I can offer my customers the lowest cost possible so I can compete. And so businesses try to move to the next lower cost alternative. We'll have to see how this all plays out.
Thanks for the question. Thomas, and then we'll go right
We'll
to the title
see.
next.
We'll see, Dan. You know what? They probably might actually reject it at this low. Shit, I didn't even think about that. They actually might reject it at the low.
As the Federal Reserve Bank has put out decades of research on the importance of it as it relates to the economy. It's a workforce issue, and it continually comes up as one of the top needs of the Becker County and Detroit Lakes communities as a need for quality, affordable childcare. And just curious if there's any policy, new data research coming out from the Federal Reserve, or if you can speak to localized solutions that are working in other communities that could be potentially employed here as well.
Yeah, it's a very tough issue, and we talked about it a little bit yesterday as well. And I spent actually a bunch of time trying to analyze it selfishly because I have two young children. I have a 6-year-old daughter and a 4-year-old son. My daughter's now in kindergarten, so it's not less of an issue. Our son is still in a daycare setting. My wife and I are very fortunate. We can afford it, but it's very expensive, and we know many people can't afford it. And so what's the challenge? At the same time, childcare workers are paid very little. And so there's something really weird going on, which is it's unaffordable for many families, and the wages are very, very low. And if you want wages to go up for childcare workers, and I think they should go up, it becomes even more unaffordable for families. And so how do you square that circle? Ultimately, the money has to come from somewhere. And so either governments could decide, hey, this is a priority, and we're going to support this to try to provide decent wages for childcare workers while maintaining affordability for families. Or in some communities, you've seen businesses step up and say, hey, I simply need the workers that I need, and this is going to go into my overall cost of operating to make sure I can get the workers that I need and provide some support for families to be able to afford the childcare. What I'm suggesting are not easy solutions, but that's it. That's the math. And an analogy that it finally dawned on me was agriculture. And I'll give you an example why I think it's like agriculture. If you look around the world, most countries subsidize agriculture in some form. And why do they do that? They do that because they want high prices for farmers and low prices for consumers. Those two things are directly in conflict. The only way you can have high prices for farmers and low prices for consumers is with government subsidies of some form. The only way you can have decent wages for childcare workers and affordability for families is somebody else supporting that, the economics of that situation. And so I'm not here to say yes or no. I'm just here to say this is what the math is and why it is such a challenge, not just here in this region, but all around our district and around most of the country.
Thanks, Thomas. And we will hear more about daycare and from one of our presenters today. So a little bit more locally and what things are being worked on. So we'll look forward to that. We'll go right down front here.
Hi, Matt Rachensky with Mid-Minnesota Credit Union. My question was about, there's been a lot of talk about government debt and talks about efficiency. My question is, with a lot of debt coming due from treasuries, et cetera, at higher interest rates versus around the time you started, right, 2.5 on the 10-year, how much does that play a role in getting rates down? In your guys's, when you're going through all the factors, how much does higher interest rates affect, the ability to bring those down?
Well, it doesn't affect our analysis. This is the gentleman is raising the distinction between monetary policy and fiscal policy. So fiscal policy is our elected leaders decide how much to tax us, whether it's sales taxes or income taxes or corporate taxes, and then what they choose to spend it on, whether it's defense or education or childcare or healthcare. Set that aside. Then there's monetary policy, which is what are the interest rates that we need to balance out the economy to get 2% inflation and maximum employment. So the effect of our monetary policy on interest rates and government borrowing costs, that does not come into our calculus. We're not supposed to think about that. We're supposed to say, what does the economy need right now to achieve these goals? And ultimately, it's up to Treasury and the Congress to sort out how much do they want to tax, how much do they want to spend, how much debt do they want to raise, and then the markets will determine what the cost of that debt is. If you look at the 10-year Treasury, there are a lot of things that go into the pricing of 10-year Treasuries or the interest rates. The Fed's interest rate policy, expected policy, is one component of that. Inflation expectations are another component of that. Then there's this residual that we call the term premium, which is all the stuff that we can't explain. It's like dark matter that goes into the 10-year Treasury, and economic growth is part of that. So if the economy is growing stronger and we have high productivity and there's a lot of investment, all else being equal, you would expect a higher interest rate environment because of that. Thanks.
Thank you. Here, let Melissa come. Give you the mic.
Hello, Austin Morris, Enclave Development. Kind of two-part question. One, can you share a little bit about equivalent cost of housing as it relates to inflation and what proportion that would make up? And then two, with single-family homes being in a state of, you have about 75% of people with mortgage rates less than 5%, so there's that stuck factor. Then we have an undersupply issue. Then we have a pricing challenge for any young person to buy a home, and they're buying them later, probably in their 30s. How do we get to 2% while not causing housing to be out of reach for a lot more people?
Oh.
And when we think about our kids or whatever, I go,
We'll see what happens there.
maybe people will just rent. Maybe it'll be 40% of the United States rents in 15, 20 years.
So let's say, first of all, the inflation, we call it a basket. There are government economists who go out and look at what does an average household buy in a given month. And then, eggs obviously gets a lot of attention because the price of eggs, that's a piece of the basket. Housing is a piece of it. And depending on the measure, it's somewhere between 25 and 40% of the basket. We use different measures of inflation. And so ballpark, 25 to 40% of the basket, quote unquote, of a typical American family, 25 to 40% of what they spend in a given month would go towards housing. In terms of cost of housing and inflation and interest rates, you're right. A lot of Americans refinanced their homes when interest rates were very low during the pandemic. And so the actual mortgages that most people are paying are nowhere near the 7% mortgage, roughly 6.5 or 7% that's being offered
right now is
today.
like probably like
And
the
so there is
worst
a
time
stuck
getting a
factor
house.
because people can't move or don't want to move because they don't want to reprice. You know, the mortgage on one house is at 3%. Buy a new house, it's at 6.5%. There's a big cost associated with that. The interest rate component of this is what I would think of as a shorter run component, which is in the next year or two, as inflation hopefully comes all the way back down, hopefully the labor market stays strong, we ought to be able to reduce interest rates further, which should have some effect on mortgage rates. But that's not going to change the underlying dynamics that we talked about a few minutes ago, which is it's expensive to build homes. Do you have the labor you need to be able to build the homes? Where do folks get the down payment? You know, we've structurally underbuilt. And so that's a longer term challenge. And you're right. I mean, I think that people will end up, they need someplace to live. And so maybe people are going to rent for longer. Hopefully more development's going to come in and be able to buy the homes that Americans want. It's a real challenge.
All right, other questions? Mike.
Mike Ring
I mean,
from
'cause it's
Council
possible, dude.
Realty.
That's fine.
The
Right.
Associated Press yesterday announced that
Not,
consumer
not
confidence
something
is
that's
at a 12-year low. How do
impossible
you
to
feel about
achieve.
that, and how will that affect decision making moving forward?
Yeah, there's been a real shift in confidence in the last couple months. As I said, I've been at the Fed for 10 years, and this is the most dramatic shift in confidence that I can recall, except for when COVID hit in March of 2020. And so when I think about it, and a lot of it is what you all said in your word cloud, a lot of it is uncertainty around the tariffs. Right now, nobody knows how high are the tariffs going to go, what are they going to get applied to, what are other countries going to do, and how long are they going to be sustained. So that's created uncertainty.
I feel like
It's
I feel like
conceivable,
that's misleading. Other
here's why
countries
uncertainty is
move
a
to the
challenge.
tune of the United
If
States.
everybody in this room is
There
nervous
is no such thing
as a
as
consumer and as
retaliatory
a business
tariffs unless
owner,
you're China or
and
Russia or
everybody
something like
pulls
that.
back at the same
Everybody
time,
else
that can dramatically weaken the economy just because
recognize
everybody
the
says, hey, I'm not going to go out to restaurants.
U.S. dollar
I'm not
as
going to
the
invest
world
in a new
reserve. So
factory
I
at the
mean,
same time. That can slow the economy. So it's conceivable that the hit to confidence could be a bigger effect than the tariffs themselves. So that makes me nervous. The good news is that hit to confidence could be restored quickly if there are resolutions of these trade uncertainties right now. So if there are agreements between the United States and our major trading partners, then confidence in theory could be restored quickly. So I take very seriously the hit to confidence, but I don't know how long it's going to last. And the longer it
I mean, I'll
lasts, the
take the
more
short at.
meaningful it becomes.
So I'll take the short around 320. I do want to see what they do up there, but I'll take the short at 320. I'll try for a short up there.
Thank you. Tanner Goodrich, Essentia Health. I just want to follow up on that question a little bit.
We'll
So
see,
in your
though.
view, as you're looking at the macro data, is that uncertainty irrational right now? Or, I mean, do you
But
feel
I mean,
like
we did have a
macros say
really
that
big
it's
fall,
rational
though.
for
I
people
mean,
to have
we
this
fell
kind of
so
uncertainty?
far.
You know, I'm reluctant
I mean,
to
if we do
tell
see
somebody
price
who's
kind of
nervous that
push
you're
above this,
irrational for being nervous. If you look at our own deliberations at the Federal Reserve,
if we see a push
I'm
above
uncertain.
this low,
You know, people have said, well,
then
tariffs on one hand push up prices a little bit, so maybe
Mm.
that's inflationary. But then, so that would, all else being equal, think of a higher interest rate path if prices are higher. But then they're also slowing economic activity, which would push down interest rates, all else being equal. I look at those two things and think, okay, just it's kind of a wash. Just sit where we are for an extended period of time until we get clarity. And so I guess I'm just saying I share the uncertainty as we're trying to analyze and forecast the economy. I'm uncertain too. And so I don't want to tell anybody else that their uncertainty is irrational.
Fair. Other questions?
All right, so let's see if we can get a push above that low.
So let me ask you all some questions.
Because I mean, if the
Did
bears
I
were going to
capture
short it there, they
correctly?
should have already
Thing is,
done it already. We know what a
overall,
short looks like.
Detroit Lakes area
So
is
it
doing
looks
well.
like
The
that's
economy
not
is
where the
doing
bears
well,
are right
but there
now.
is this uncertainty that we've just been talking about. Does that sound right?
If you agree, just raise your hand really quick. We'll just see.
Great.
Majority. Okay.
A lot of hands went up.
Mhm.
Are there any other
Yeah, I
challenges
feel the same way too.
that your
With
region is
Trade,
experiencing, economic challenges
feel the same way
that
too.
we
I mean, we
haven't
can
talked about
pass
yet?
this. You already know what's above that high.
We talked about
Shit, you
housing.
already
We
know
talked
what's
about
above it.
childcare.
You
Talked
already
about
know what's going to
availability of
happen
workers. We haven't
if we
talked
push
much
past
about
it.
that today.
All them buy stops just sitting right up
One
there.
thing I know is in a lot of our district, especially our smaller communities, availability of workers is a
Now, I
perennial
mean,
challenge.
kind of trading against
Is
this. I
it
mean, this technically is a breaker
more of a
structure to the
challenge today, or
downside,
is it kind of the normal
and this is
challenge
the
that you
retest
have?
technically. But when it comes to the Nasdaq, we all know that
All right, let's
sometimes
go
that
bring a
shit
microphone
is a
to you, sir.
trap.
Appreciate you speaking
Sometimes,
up.
Yep.
especially when we got like a big move in a straight line without any ranging and pricing
It's more of a challenge,
or
and
ranges
housing
and
is a big
expansion
part of that because
from those ranges.
people can't move
So
here because there's no place for them to live.
this rate, this is a gamble.
Want to come here
If you're
and buy
trying
a
to
house,
trade against this is a gamble.
And is
50-50
it
chance.
possible, I mean, is there, I saw some data on this, is there, if somebody came here and said, hey, I want to build a house, would they be able to do it? Or it's just so expensive that it'd only be the
yeah, they
upper echelon
they
worker?
could do it, but they couldn't afford to pay it or get a loan for it because their wage would not match what the housing cost is.
Behind you, there's another one.
Behind you, Beth.
I'm Beth Priddy with SBDC. I think the problem is that there's not good jobs for both spouses. I have a lot of friends that would like to move here. I also I help businesses with startup, and one spouse can get a good job, the other one can't get a career, if you will. They have to take something, lesser or just whatever's in the market, and that seems to be a big problem when you move to a town.
People are
It
going
was
to
a big
learn.
problem when I moved here 24
People
years
are
ago.
going to learn that
One
when
area, and I've heard that a lot, so I know you're correct. One
you're dealing with
small
somebody
source of
else's
optimism
dream,
is that in
they
the
don't have to
pandemic, of
hire you.
course, remote work became more
They do not have to hire you
normal.
at all.
And I think the pendulum is swinging back for a lot of businesses, but I also think we're able to access a lot of talent all around the country that maybe we weren't able to access before. And so that
Of course, when I
shows,
get
I
in
think,
long,
long
that's when
run
it wants to look
potential
like it's going to go
to
short.
hopefully help.
Of course.
Celeste had some. Alyssa. There you go.
Thank you. I would like to return to your takeaway about economy doing well. And I would just encourage us all to think about how different segments of the population are experiencing the economy, because if we analyze our 30-year or longer history as a town, I'm 31 and have lived here for 31 years, right? But we are a resort town, a retirement community. So we can go into like the tale of two cities, the folks who are working for our tourists, for our retirement community, who don't have health insurance, can't afford the houses, and those who come here to truly enjoy the beauty, right? This is an amazing place. But I'd say we do have a little bit of a tale of two cities going on, where we have those in the service industry, and we've done well increasing opportunities that are stable. So I'd like to give credit to anyone who's been involved in that over my lifetime, because I think we have seen more manufacturing, more stability in jobs, but we're still really far away from a place where I think that anyone you pull off the street would say, yeah, I think the economy is doing well. That's my experience right now.
Of course.
Thank you.
Of course. Of
Alyssa, right
course.
behind you.
As soon as I get in long, this thing drops. As soon as I get in long.
Comment as
All
somebody
right.
that employs a lot of people from the
I try
20
to
to
scale
30 year
into
old
it.
range. The biggest dynamic I'm seeing
All right.
is
So let's see if
hires.
this
People that are
will
also
hold.
at $75,000 and $100,000, equal to my age where I bought my first home at. So not being able to make a mortgage payment because they're making student loan payments that are far more than a mortgage payment would be. So that housing struggle is real because they have these other debts coming out at 22 years old.
Can you
I would say 75% of my employees that I'm hiring in that range are 50,000 plus when they're coming out of student loan debt. So,
Can you tell us what business you're from?
I'm sorry, Michelle Winkler. I'm with Precision Landscape in Otter Tail, and we're growing into the Detroit Lake market this year.
Thank you. Other questions?
Aaron Tate with 49 North Advisors. I just wanted to echo a little bit on what Beth said. For for me and my wife personally, she works in Fargo for a company you're familiar with, Bushel, with Jake Jornstedt over there, and we want to be here, and that's been a struggle back and forth a lot. But with mom being over there and us being here and my business being there, Fargo supplying higher paying jobs, cost of housing. Fortunately, we've got two good jobs that we can afford.
I mean,
That's, I think,
this.
a real
I mean, like I
dynamic
said, this
for
short. I mean, it can work, but damn.
For sure.
And this is
Thank
why
you.
I just hate taking shorts because man, you just
Well,
don't know
let me say thank you.
if it's
I
going
really
to work
appreciate
out this
the
time. You just
conversation. I
don't know.
appreciate the hospitality. We had a really rich discussion, and I look forward to coming back to Detroit Lakes. Um, and you know, if you hear things or see things, my staff is here. We can leave our contact information. You know, we'd love to hear from you. If things are happening that you think we ought to know about, you know, please reach out. It'll just make us smarter in our understanding of the economy. And so, thank you so much.
Thank you, Neil.
Thank you, Jackie.
Thank you so much.
Okay. All right. So our boy Crash Kari did crash the market. I mean, he lived up to his name. And this boy, the market, he gave the Bears hope. Boy, did the market crash. I mean, obviously, this is not obviously using the term crash is an exaggeration of what happened, obviously. But we did get a big move down. We did see a big move down here. So I mean, if we keep going in the direction that we're going, I can definitely see us potentially taking out Monday's low. Why not? I mean, we're not Monday's low, filling that gap. We do got what is it called tomorrow? GDP. So we could see a gap filled in. We could see a gap fill on Friday. And we all know that the market likes to use gaps to manipulate liquidity. So Crash Kari, we need you. Bear has always been just like what the last Airbender, when the bears needed him most, he disappeared. They had him in a cave, chained up. All right. I mean, of course, it doesn't want to fill my limit. If it's gonna work, of course, it's not gonna fill it or nothing. Yeah. Okay, I know better next time. I know better next time. I know better next time. Like, God damn. Nasdaq, you ain't gotta be nasty like that. She did not have to be nasty like that, dude. That is so nasty. Oh my God, that is nasty. That is nasty right there. That is nasty. Nasty, nasty, nasty. That is nasty. She missed me literally by a tick. No. 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 I deserve to be in this. No. No. Yeah. No, I deserve to be in this. No. Ah. Ah. No. Ah. Man, I should. Nah, I would. Target. No, target filled. No. 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 Oh my God. Nasdaq. 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 Mm. 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 Hmm. No, this is a an eval. Currently, I'm only funded with Blue Sky and MFF. I haven't traded a Top Step account in a very long time. Kind of done away with Top Step. I mean, there's really no incentive in trading them anymore. I can't rob their bank account. I can only take out $5,000. I mean, every prop firm is doing that, but I mean, well, let me rephrase that. Every prop firm is doing that, but at least they're making the prices like more attractive. I mean, I got my Blue Sky account for $100, and that's for a 20K static account, like a 5K static account, and they're selling those for nice. Cool. All right. That is not fair, Nasdaq. Oh my God, that is not fair. That is not fair. Damn it. Ugh. Damn. Damn. Oh man, that's not fair, dude. That is not fair. That is not fair. That is not fair. Hmm. Okay, that is not fair, man. All right, Father of Legends. Have a good day, man. Hmm. Now, I do want to point out we are seeing some bullishness. We are, but remember, price is below the 200 EMA. It is below it. So we got what appears to be a strong high. We got a block of liquidity right here. We got a break of structure right there. We got a big move down that break structure, and we're about to get a retest back into this area. So keep it tight. If we get a retest of that area, um, I wouldn't be looking for longs anymore. I mean, at that point, the bulls are gonna have to prove it to me that they still want this thing. Bulls are gonna have to prove it. Now, I'm willing to get in, limit in at this right here. I am willing to kind of get back into this, but because we did not reach this level yet, and this is where I think the bears are waiting. They are definitely waiting right there. You say he was on at 260. Yo, congratulations on that, bro. I wish I was right there with you, Investor Z. The Nasdaq took that opportunity away from me. She took it away from me. Okay. All right. So let's see. Like like I said, I was willing to limit right there. I put that right there. 66.55. 66.55. Put it at 66.75. Probably just put it at like 67. Oh shit, that's a sell limit. I was like, why is that purple? All right, so buy limit. 67, 75, 66. There we go. And this will be my last trade for the day, honestly. Damn. Okay. Yeah, once I get these targets filled, I'm gonna be done for the day. Actually, I'm gonna start. Well, I'm not gonna tell the Nasdaq my plan. She'll try to use it against me, so I'm not telling you what I'm gonna do. I'm just gonna do it. You said RRS, so RSI. So that's so. What is the RSI anyway? I see a lot of people talk about it. I mean, I don't know where this is even coming from. I mean, that doesn't make sense. That doesn't make sense. That doesn't make sense. All right, so what is this orange line talking about? All right, so yeah, that low right there. So when price came back to it, we got that move underneath it. How reliable is that? If you just took a trade based on RSI, how reliable has that been? I mean, I understand that all indicators aren't 100%, but out of 10 trades, how many trades would you get right? Just using the RSI, no structure, no nothing, just using the RSI. I'm not telling you what I'm going to do, Nasdaq. I'm just going to do it. Yep. I see it. I already see it. I already see it. Yeah, I'm just going to keep trading this way. Um, I mean, when I'm wrong, I don't necessarily lose too much when I'm wrong. I may lose about 1500, 2K, but that's not even that bad. And by the time I lose that much money, I mean, the next area of support is right around the corner. So yeah, I think I'm gonna keep trading this way. Mm. Okay. Shit, they're probably taking a break. They're probably selling the markets right now. Especially gain weight because he was long. I don't know if he taking his profits. But then I mean gain weight usually have a really good entry. So I mean these types of drawdown days, I mean yeah they suck, but it's probably like a small percentage of where he's actually long at. I mean if he wasn't trolling yesterday and he was actually short. Hmm. I mean we did see that small little pop, that drop, and then I mean it did make new highs. I think a lot of people was targeting closer to 600 though. I mean, that 530 drop was kind of out of nowhere. That shit was literally out of nowhere. I drop at 530. Actually, let me make sure what I'm talking about is true. 530, because I mean, maybe there was like previous, because it dropped at like 530. Yeah, I don't even see why it dropped at 530. I'm looking at a higher time frame chart. I really don't even. I mean, there is a little. Okay, so I mean, I will say there is a gap between 55 and there's a gap between 505. There is a gap. I mean, I would say that, but whatever. Well, I'm not talking about like a gap. We're talking about there's no overlap between those candles. There's no overlapping candle between 55 and 505. Naked PLC. What the? I'm gonna have to look that up. What is a naked PLC? Where's man? All these naked PLC, huh? Hmm. Oh, okay. All right. Okay. Yo, thanks for that, Rocket. Naked PLC, huh? Hmm. I think I have an indicator for that. Naked PLC. Hmm. Extended naked PLC. Hmm. You know what? Because it hasn't been touched, we're gonna make it white. We're gonna make it virgin white. We're gonna make it virgin white. We're gonna make it visible. We're gonna label it, and we're gonna make it dots. Let's see. Hmm. So look like we have Point of control, naked point of control at 426. So 426. Actually, what I'll probably do instead of just doing that, I mean, I guess we'll see. I guess we'll see how untrue. Oh shit! All right, I gotta be more mindful. All right, I gotta be more mindful. I mean, the 200 EMA on the Nasdaq chart is all the way up here at 330, but the 200 EMA on the 1800 tick chart is at 317. You might get a touch and drop. But no, I think they want the liquidity up here for sure. They want this liquidity up here. They want this liquidity. Yeah. Okay. Let's see if we push. See if we push it here. All right, there we go. Got a couple more points. A couple more points to that area that I think that the market is trying to really get to. Mm. I see you, Gainway. So Gainway says that he accidentally sold the market, and that's why we're getting this big drop. Well, accidentally buy it. Shit. We trying to get these targets hit before the end of the session or before the end of the stream. Oh, there we go, baby. There we go. There we go. We got one more. There we go. There we go. All right. All right. Let me take this off. Let me take that off. Take that off. Yeah. So the way that this thing is looking and struggling, dude, okay. So this would be absolutely nasty. I'm thinking that the market wants to at least touch 320 or somewhere close to it. Look how it's struggling to get there. Now, if we get to 320 and then they do like this fake out and then they start pushing it higher, yo, just know, just know that that's just how nasty the Nasdaq is. That is just nasty. Because I think 320 might be the level. 320, 330. Somewhere in that range. Smith just sent me a great philosophical message just now. I want to read this to you guys. It's so funny. He says, well, he's done trading for the day, and now that he's bored, if you're not making or losing money in the market, then what are you doing? Like, and that is so true. What are you doing? What is life without making or losing money in the market? Every time I'm done for the day, like, dude, it's like, man, I could be making or losing money right now. Like, I just these charts are my life, dude. Like for real. These charts are basically my life at this point. I mean, yeah, you have hobbies. I mean, you have wife, kids, girlfriend, boyfriend, whatever you like, studies, but nothing can beat the joy of being in front of your desk, looking at the chart and taking a trade and hoping that it hits your target and not your stop. Mm. Uh, mm. Yeah, this thing they're gonna keep buying until they get to that objective. I'm not gonna be afraid of these little drops. They're gonna keep buying until they get to that objective. I would find, I mean, at least close to it, or if not, just touching it completely, because they're not gonna do all. These bulls are not gonna do all the struggle buying just for the bears to drop it and just for them to come back up and then let them drop it again. That don't even make sense. So I mean, there's a whole lot of struggle buying. I mean, I guess they could drop it here, but I mean, I really think. I mean, is 317 close enough to 320? Is that close enough? Yeah. And they're doing a lot of struggle buying here, but hmm. I mean, hmm. Yeah, I mean, 320 has to be the market's objective right here, dude. I mean, this is a measured move. This is definitely a measured move right here. Yeah, 320 has to be the. And then we're probably, honestly, I think the Nasdaq is going to be nasty here. I really think she's going to be nasty here. She's going to fake out up here. She's going to fake out. I mean, we played this game so much with the Nasdaq. I mean, at this point, we should know it by now. She's going to fake out. Mm. So it's an option dead zone. So yeah, I guess actually let me look at I guess when I look at it, that's when it's like, oh, you should have been quicker than that. You should have been quicker than that. Mm. Okay. All right. Oh, that's interesting. That is interesting. The Q's is actually at a spot where, oh, that's interesting. Mm. Hmm. So this is what the Qs are at. The Qs is at this gamma level finding support. Hmm. The 0 gamma at 489. Hmm. Yeah, I think so too. Come on, baby. You know you want to. You said back up to. And you're talking about selling it all the way back down to 430 or going back up? Or are you talking about the Q still, right? You said 0 gamma at 489. It says all the way back up to, so you meant like 480 maybe? Uh, okay, 20. Okay. 430. Yeah, cuz yeah, yeah. Right there, you actually could be onto something because my naked POC is right now is at 426. All right, here we go. Here we go. Here we go. Let's see what the market chooses to do here. Yeah, there's a lot of sell pressure up here on Bookmap. A lot. But we, like I said, we got a big drop down. So I feel like this could potentially see a drop, maybe, potentially. But I wouldn't put my house right here to short this. I mean, if you feel like this is going to short, uh maybe 1-2 contract, maybe a light position right there. Because I think the Nasdaq is going to be nasty here. I think she's going to be nasty. Yeah, I mean, I think. Damn it. Damn, it hit 320. I wasn't paying attention. Damn it. Damn it. Ta. It hit 320. I wasn't paying attention. Damn it. Ta. Damn it. Ta. He says, I'm seeing if I can be productive with a tighter stop, but I review and revise it on the weekend because I believe. Hmm. I mean, well, I mean, obviously it's just your account, but I mean, I don't know what you would call a tight stop. I mean, shit, Muhammad says that if it don't react at his level, he gets out immediately. I mean, that's shit. You talking about precision sniper? If that's the case, I like to have a 27-point stop, maybe 36. Better to need it and not have it, and have it and not need it. Or is it? That's how you say it. Better to have it and not need it, and need it and not have it. Yeah, there you go. Ah, man. Yeah. You know what? That's my fault. I'm gonna learn to. I'm gonna learn to do exactly what I say I'm gonna do. I'm gonna learn. It's my fault. It's my fault. I'm gonna learn. It's. I'm gonna learn. I'm gonna learn. 'Cause the market doesn't have a problem teaching it to me. I'm gonna learn. Yeah, I'm pretty sure. We'll see. We'll see what happens. Oh, I'm gonna learn. Gonna learn today to get out when I say I need to get out. It's 3:20. Been saying that all freaking morning. Then let it hit at 3:20. Didn't do nothing about it. Like, come on, bro. Come on. Come on, man. Come on. Come on. Come on, man. Yeah, there we go. Hmm. Hmm. Ah, damn. I can't do that. Damn. Gonna learn. I'm gonna learn. I'm gonna learn. Learn. Mm. Damn. Okay. Ah, shit. I mean, if I that's asking, like, that's where everybody stops at. Damn it. Damn it. Damn it. Damn it. Damn. No. Ah. Oh my god. Oh my god. Oh. Mm. Mm. Damn. All right. Uh, mm. Mm. Damn. Damn, dude. Damn. You gonna learn. You gonna learn. Mm. Dude. Gonna learn, bro. Gonna learn. Okay. I mean, if they just pump this right here, if they super pump this, okay. Mm. Hmm. Hmm. Stupid mistake on my part. Stupid mistake. That was a stupid mistake, man. That was a stupid mistake. It was literally right there. Stupid mistake, man. Hmm. All right, so we'll see what they do here, man. We'll see what they do here at 240. We'll see. Uh, That looks like a buy wick. That looks like a buy wick. Oh. Mm. Crash Kari, we need you. Shit, I need him right now. Damn. All right, yeah. I might. I mean, if they don't reject it at that area, I'm gonna get out. I'm gonna get out. If they don't reject it there, then this could potentially go higher. Mm, this could potentially go higher. I put this at 90. Yeah. So if we don't see a rejection here, this is going higher. If we don't see the rejection here, and then I'm gonna just have to come back probably later on today or tomorrow or something like that, cause see if anything else sets up. Damn it, you better limit me in, damn it, and work. All right. Okay. So I'm not gonna give it this much of drawdown, cause I mean if it I'll give it damn. I mean with this low entry right here, it's gonna mess everything up. Okay. Probably 306. Right above that candle right there. Okay. I got 3 more minutes and then I'm gonna end the stream. We'll see if we get this area to act as resistance, at least for right now. Damn. Okay. Damn. The market's gonna. I mean, it's. All right. I made the mistake. I'm trying to fix it, but it looks like I'm digging a hole for myself right here. That's what it looks like. It looks like I'm digging a hole, or that I've already dug the hole for myself and hoping that I can get out of it. But I think I may have made a mistake. We'll see. This is exactly where the Bears need to hold it at. This is exactly where they need to hold it. If not, then we're gonna see a pop. You say he was in that situation earlier? I would. Well, I mean, I'm in the situation now, but man, my least favorite situations to be in is having to depend on Bears to follow through. I always make the bet that the Bears will fail, but man, the toughest bet is always seeing if the Bears will follow through. Let's see if they'll follow through here. I mean, they have every reason to follow through, but they just always tend to fumble. All right, Bears, all you gotta do is follow through here. That's it. That's all you gotta do. Follow through. Ah, shit. They're gonna probably buy it here. Yeah. Of course, the break. See, okay, the signs are already there. The break even is support. I have to rely on the Bears. Man, okay. This position may be cooked, but we're gonna hold. We're gonna dedicate our hearts to this short. Come on, come on, come on. Oh, come on. Yo, yo, come on, come on. Oh man. Well, all right. All right, guys. That's it for me. I can't stay. I gotta get into this meeting. But all right, guys. We'll definitely come back tomorrow. We'll come back later on tonight. Uh, I mean, if I lose this trade, that means I got to get that money back. So, um, yeah, I'm gonna have to get that money back. So I'm gonna go to the gym and come back and see what I see. But if the gods are gonna be in my favor, maybe. Okay, come on, come on, come on, come on, Bears. Do me a solid here. Of course. Do me a solid. I am kind of playing around with my time right now. 36. Of course. Yeah, it kind of feels like that short that we took at the end of the day yesterday. That just took forever to work out. Okay. Come on, Bears. Come on. Come on. Y'all can have a little bit more power than that. Come on. Of course. All right, so one more. Man, I am playing on my time. 37. God. Okay. Okay, keep on going. All right, so I mean, if this thing pops here, all right, 38. Come on, baby. Keep on going. Come on, keep on going. Shit. Okay. All right, guys. Yeah, that's it. I'm not gonna sit here and watch this. I'm playing on my time right now. But we'll definitely come back later on tonight and we'll look for more ways to earn some more money. And with that said, peace out, everybody.